Hello everyone, Philip from BlackBull Markets here, doing another pre-NFP video for you guys. So again, the day before NFP, we will be releasing these videos. So once a month they will come out. Do check out our YouTube for them as well. Some of them will be uploaded on our Instagram TV as well. So keep an eye out for that. Looking at the first charts, obviously we'll be going through just the USD pairs, and we've got a couple here. I'm excluding the CAD USD just this because Canadian rates come out as well, and it can be a very difficult pair to trade. Can do a bit of damage to you. So generally you want to try to avoid any CAD USD pairs during NFP as well, because like I mentioned, those rates do come out. If you're inexperienced, this could be a very damaging trade for you. So starting off with our first pair, we're looking at the AUD USD versus Aussie versus the US dollar. We need to keep in mind that the Aussie is not open and only the US is open. So this could create some nice movement due to the effects of only the USD the US economy impact on it. So first what we're looking at here, currently we're sitting inside of sort of a consolidation zone starting back here in February. This is the 4-hourly time frame, so we can see it started back then. We had a bit of a breakout and we came back into that zone again, So now we're looking for a possible consolidation until the NFP does come out. What we see here is we do have a resistance coming to the top. What we have is 0.66757 I've got here roughly. So if it does break out, we can see a possible push to there, looking to maybe test into this liquidity zone that we've had over here. So a bit of a messy zone, but this is generally the sort of target area we're looking for, keeping in mind these internal support / resistance areas. We can see here previous resistance, support, resistance, support, resistance, support, resistance, so on. To the downside, we had a bit of a wonky head and shoulders, I would say, over here. You can see the shoulder over here, neckline, bit of a neckline as well, shoulder, and we have the head over here. So this could offer us, again, with a nice sort of support zone that we could be looking at. So you can see here, that was actually a very nice support. So again, break to the downside down there. So not a lot of movement, about 30-40 pips in this. So the one thing I would recommend you guys just having a look at as well, when NFP does come out, again, with all these pairs, try to avoid using pre-trades, so buy stops or sell stops, because you can get slipped during NFP if you are trading with an ECN broker. So keep that in mind, where if there's not enough liquidity in the market, there generally won't be enough liquidity. So there's a chance your trade won't get triggered. In some cases, you could get slipped pretty badly in that. So keep that in mind. If you are willing to risk that, feel free to do so. There is a possibility of catching a nice trade. But if you're going to trade micro lots or mini lots on these kind of pairs, chances are you will get slipped, as they are placed last in line to get filled. So how it works is the big trades get filled first, and they fill in the gaps with the smaller trades. So now moving on to our next pair, again, like I said, so this is the target to the downside. If that wick does happen, once it initially pushes down, so what we could see is sort of a movement that comes down and it wicks back up again, you could potentially trade that liquidity generated by that to retrace that initial movement. Now moving on to the next pair is the Euro USD. So again, I'm not really a big fan of the Euro USD because there is a lot of liquidity in it, a lot of volume, actually, rather better said. A lot of new traders by default go to Euro USD because it is the most commonly known pair, and we can see a bit of it can be quite difficult to trade because it can be quite a mess on the smaller time frames. But looking at this, it looks quite nice at this stage. What we had is a very strong push to the upside, following sort of a bit of a hesitation here by support / resistance area. Just to chart it out for you guys, we've got it here. You can see that offered a nice resistance. Again, we had a pretty cool support on this side. You can see it offered previous sort of support areas, bit of support. Again, support here, some resistance. Generally, just the area where the market tends to take a breath. You can see we had a bit of a consolidation, a nice strong push to the upside. Now what we have is market looks like it's starting to come to rest on a support again. So a bit of a zone here. What we're looking at, we can see these wicks over here did sort of fill out with that. So we could see this being created as a zone using that wick over there for the top part. So if it does come to rest here pre-NFP, we could see it potentially use it for a break to continue going higher using this momentum and strength. If NFP does happen to push this down, we could possibly see something like, let me just actually blow this up for you so you can kind of have an idea. We could see something like a wick come down into this zone and then for the candle to push further to the upside. So ideally, obviously won't be this candle, so in the future we could see something happen like this, where we could see a wick push down and a candle to continue back to the upside. So again, create some nice liquidity, potential trades to the upside. We need to keep in mind, on the lower time frames, this is a very strong sort of support zone that we are looking at. Let me just quickly fix this. So yeah, so this is a nice strong support we are looking at. So we need to keep that in mind. If the market wicks into that, don't panic and take a sell to the downside, because we do have support coming up. It is a very conflicting area. I would say only perhaps looking at taking sells once it breaks past this whole consolidation zone, and then maybe we have a possible clean track to the downside. So break past it, comes to retest and push further down. To the upside, look for a potential, like I said, push back into the zone and then continuation in that trend. Now, moving on to the next pair, we have our GBPUSD. I usually do GBP JPY as well for NFP, but recently the JPY has actually been unhinged and not with the gold. So, but in saying that, people have not been really using the JPY as a safe haven due to its being in a recession. We also have coronavirus infecting it there as well. So JPY is kind of not really that safe haven people liked it to be anymore. So we see it, more investors push to gold. That's why we're possibly seeing such major moves in gold, where we're seeing these large moves, because everyone who used to use JPY as a safe haven now is pushing to gold for safe haven. So we're seeing on the 1 minute time frame, moves of 30-40 pips on 1 to 5 minute time frame. So that's quite a large moves in the market. So that's quite interesting. So that's one reason why I'll be avoiding sort of the USD JPY and the GBP JPY, just due to that reason alone. So again, moving to GBP USD, sorry. So we had this kind of nice move to the downside. In my views, we had a bit of an Elliott wave here. So we've got waves 1, waves 2, waves 3, waves 4 over here, and wave 5 pushing up with the nice waves 1, 2, 3, 4, and 5 internal waves as well. So obviously this is going to now be a correction. We can see it's quite messy. I'm not going to be bothered counting this out. Rather use the Elliott wave as a roadmap as to going into deep detail with it. If you get too hung up on that sort of analysis, you can sometimes miss the trade, which is the important part, obviously. So what we're trying to look for here is a possible break of a trend of, a channel here. So we've got the channel moving to the downside. So you can see quite nicely over here, but sort of used that wick at the top as well. So very, very strong. You can see it's continued to decrease in size here. So initially this was our previous set, then and again. So channel is starting to form quite a nice thin one. So if it breaks above here, we could see nice possible moves to the upside. Now we need to always keep in mind this is a daily time frame, so a nice target for us to go to would actually be right about here, which is round about support / resistance zone, because like I mentioned, all these patterns have got these internal zones that we need to keep in mind. Even if you are a swing trader as well, these are also things you need to keep in mind for the market once it breaks out of these zones. These could also potentially be potential areas to climb back on board on that train. If the market is now continuing its uptrend, we could use these. If you miss this breakout, you could always use these to continue back into that nice move. Obviously the high over here, I'll be very careful to continue back on. If you are a swing trader, obviously if you're a lower time frame trader, this is a nice sort of range for you to push into. So just keep these things in mind. So moving to our lower time frames, what we could see before NFP happening, we could see a possible sort of consolidation, or a slowdown by this area. If it does continue to push up, we could see it reach that lower time frame. Quickly have a look. We actually do see a wick fill here on the 4-hourly time frame, so that could be a nice sort of recent trade if you want to push for that. It's about 17 pips, so I mean not really worth it, but I mean if it's your kind of thing, feel free to do so. Looking at the hourly time frame, we can see the markets now are starting to correct. So quick push up to here, about 50 pips, which is not bad. A 50 pip range to trade in before the NFP could be nice as well. But again, people are going to tend to wait before they place their orders for NFP to come out, as people become more hesitant to trade. So moving on to the next pair, what we're looking at is NZDUSD. Sorry. So again, New Zealand will be closed when the NFP comes out. USD will be open, so it'll be only influenced by the USD. So we could see a nice clean move in here. So what we're seeing here is also again sort of a very sticky situation. We can see a very strong, well, not strong, we can see a very sort of struggling market pushing to the upside. So this could be a correction, because looking at the higher time frames, our daily, we can see it as a very strong downtrending market. We did, however, reach the support, which is quite interesting. Usually during this time of the year, we do see the Kiwi push down and we start to see it gain back a bit more strength. So hopefully, hopefully we can possibly see this continue to push down, as we are even on the weekly time frame, extremely strong downtrend. So this could be possibly just a test into that zone where we can see here. I'll just make a rather big zone here. We can see that it did offer a previous, support. So this could be now a bit of, like always, a liquidity wick to grab some, potentially grab some stops to push the market back down again. If we see a close below this level, I'd be very happy to potentially look at movements to the downside for the Kiwi. But obviously, it's a weekly time frame. We've got a couple of days. We've got about 2 days left for that to happen. So looking on our lower time frames, again, we see lots of wicks rejecting that zone. We could see a possible another wick fill here, but chances are quite strong that this could continue pushing down because of this. So let's keep an eye on this. However, to the upside, what we see here is a nice clean move as well. So if the NFP is good and Kiwi decides to strengthen itself as well, we could see continuation, sort of a reversal in this trend, pushing back up to this top we had over here. If we look on the higher time frames, we can see it as sort of we're inside of a very messy consolidation zone we had over here. You can see it's quite bad, but again, on the smaller time frames, it is a nice clean zone, a very large zone, actually about 300 pips. The top one and this one is roughly about 100 to 90 pips. So again, if you're looking for day trading, this is a very big zone to trade into. Lots of nice areas to look, lots of nice potentially trades could happen inside there. So moving on to the next pair is our USDCAD. So USDCAD, very interesting. First thing off the bat that I see here was our Elliott wave. I'll just quickly just draw it out for you here so we can see waves 1, waves 2. Now wave 2 was quite sideways, so we expect wave 4 to be a sharper retracement. So what we see here, it is swiftly moved to the downside and then started to push up. So now looking at the lower time frame, trying to make some sense of here. First of all, we use some basic technical analysis. What we can see is the market came to rest on that support that offered previous resistance and now pushed back up to it. You can see a nice liquidity wick, grabbed some, pushed further higher, reached that support we had over there, resistance, and now pushed back down again. Now we're starting to test it again. So now we're looking at a potential consolidation zone over here. So this is looking very, could be a very good setup prior to NFP. So if we have consolidation in here, we could actually set up a trade somehow, or like a sell stop in this case, if you, like I mentioned, which could be risky prior to this, but could also be, if you don't get slipped, that could be very rewarding. So looking on the lower time frame, the higher time frame, we see a bit could offer consolidation. Now moving to the lower time frame, what we see here is a potential waves A, B, and wave C. We can see our 3 waves to the upside. Now breaking it down, this is our wave 5 that we are looking at. If you remember the Elliott wave I had, waves 1, waves 2, waves 3, waves 4, waves 5, I believe is still forming. Reason is because if we look on our 4 hourly time frame, we see our internal wave count as well. We have got waves 1. Now this is just a rough count. I'm not going to go into much detail here. It looks like we've got waves 2, run about here, waves 2, wave 3, wave 4. So we could actually potentially finish this as a wave 5. This could now be like maybe the start of wave 5 instead of an ABC pattern. So we'd have to look, if this wave 5 is done over here, what we can see is this actually being our correction for these this 5 wave sequence. So we could now see waves A, waves B, because this does look very corrective, and then wave C finishing. Usually, actually we'll use this one because wave C tends to be the same size of wave A in a zigzag. So we could see it push down to where the start of this original wave 4 was. So this is always a good area to look to for an Elliott wave correction to come to, is that previous wave 4. So we could potentially see this push into this liquidity prior to NFP and then push up again once that news comes out. So interesting pattern. Zoom it up a bit for you guys so you can see it a bit better. So waves 1, 2, 3, 4, 5. We have our wave correction, and then pushing higher to either create waves 1, waves 2, waves 3, or waves A and B and C. Looking at the higher time frame is consolidation. So I mean, this could be again a wave 1 to maybe start or continue this all-time trend that we had over here. We could have possible wave. We've got a correction here, A, B, C, possibly waves 1, waves 2, and continue. Obviously, not going to go into major details, but just a quick scan of it that looks like a good possibility. Now, moving on to our next pair is our gold. The most important one to trade, in my opinion, if you are looking to trade NFP. Gold is, like I mentioned, now all the safe haven traders who used to invest in Japanese yen are now possibly moving to gold. This is why we see these extremely large movements on the lower time frame. You can see these candles are just absolutely massive from what we used to have. So very nice, which is very dangerous, but can be very, very rewarding. Now, I made a trade in 60 seconds video on this as well. We also discussed this on our Monday meetings, which is a new video sort of series that is coming out. So definitely have a look at those. Very informative. Myself, Anish, and Andre are on there. We discuss our different views. Anish again on his fundamentals side of the thing. So very good information if you want to learn about fundamentals, how everything works, why the market essentially moves. Definitely have a look at those. They are very informative, especially if you're a new trader. Even experienced traders will, I believe, will learn a lot from this. So yeah, have a look at those. And then now coming back to this again, we discussed in our Monday, in the meeting as well. Also my trade in 60 seconds, we discussed sort of this consolidation zone the market tested into. We had now a push up to the upside. We can see from that sort of support / resistance, it stopped on there, pushing higher. So we could possibly see a wick fill completing here on the daily time frame, which is a nice zone to push into. Looking on the smaller time frames, we can see we've got a beautiful 5-wave count after corrections. We've got waves A, B, and C, and it's starting off wave 1, wave 2, wave 3, wave 4, wave 5. So what we could see now is actually we have this nice sort of consolidation zone here on the smaller levels. We could see it push back down into that zone for our correction wave. So we could see something perhaps forming a zigzag pattern. Essentially something like, obviously not exactly, but this is just a possibility. We could see something like this and then continue to push further higher to follow that trend. So this could be a very nice setup for us if you're an Elliott wave trader. This is ideally what you'd be looking for, what I'd be looking for if I was to trade the Elliott wave. For the technical side of things, what we want to see is pretty much a similar pattern. We could look for a sort of a push down to the zone, a bit of consolidation on the zone and push further higher. Now, if it continues to push further higher, we could see it create a bit of a this could cause a bit of rejection here for the market, and this, it could wait there until the NFP comes out. So to the downside, I mean, we're clean. This is again, gold is making these very large zones, a 300 pip zone. It's crazy. And then even this consolidation zone, we have a 180 pip zone. I mean, it's a lot of movement. It's quite scary to think of it. The gold is recently moving so quickly. So if you are going to trade gold, please be very careful. Make sure you use those stop losses. Continue with the same risk management. So measure it out. Risk, usually we say risk no more than 1 to 2%. Make sure you handle this very well, because if you don't use your stop loss, gold could seriously damage you. I mean, look at this candle. This is, for example, we'll move on to the hourly time. Sorry, the 5-minute time frame. What we can see here is just this one candle. I mean, it's 5 minutes and it's a 30 pip move. It's unbelievable. So it's okay. So quite crazy. But yeah, so that's essentially what we're looking for, a pre-NFP support resistance. We've got a couple of Elliott waves. I hope you guys did enjoy that. If you did, give us that thumbs up. I like to talk with my hands, obviously. You've seen our comments on Instagram, so hope you enjoyed it. Give us that thumbs up. If you did, click that subscribe button, followed by the bell icon to get all the new notifications of our new videos. We will be releasing a lot more this year. We've got a lot of plans for our YouTube, So definitely stick around, guys. I hope you enjoyed it. For NFP, for everyone here at BlackBull Markets, trade safe.